Good morning and a very warm welcome to the JSE Investment Forum. My name is Sam Mokorosi. I am Head of Origination and Deals at the JSE. It's a pleasure to have you all joining us as we delve into the dynamic world of trade and investment right here at the heart of South Africa's capital markets. The JSE Investment Forum affords us the unique opportunity to engage with business executives as they profile their companies. Moreover, however, the forum also allows us to explore the latest trends and innovations in the investment landscape. So before we delve into the companies being showcased today, I would like to highlight some of the most innovative developments on the exchange: actively managed certificates, or AMCs. These instruments are revolutionizing the way that we approach investment, offering a unique blend of flexibility and strategic investment management. The JSE has been at the forefront of supporting the growth and listing of AMCs on this continent. Our commitment to providing robust and transparent platforms ensures that these instruments are well regulated and accessible to a broad range of investors. This follows the JSE's introduction of a series of changes to our listing requirements to allow issuers to list and to trade AMCs. As of today, there are 51 AMCs listed on the JSE with a market cap of more than 14 billion rand. And the growth of AMCs in the market is indicative of the keen interest and readiness of the market for these instruments. And of course, these instruments contain listed companies in a portfolio. It's almost like a listed unit trust. So now, as we embark on today's discussion, I encourage you to consider how AMCs can complement your investment strategies, whether you're looking to diversify your portfolio, gain exposure to new markets, or leverage the expertise of professional managers. AMCs offer a compelling solution. So before we continue, I'd like to take a moment to thank all of the executives that are joining us this morning. Grant Dreyer is the Managing Director at Afrimat. Tafadzwa Mika is the CFO at Vunani Limited. Tertius Zitka is the CEO at Foresight Holdings. And Michael Jones is the Chief Financial Officer at Tharisa. Thank you to these four executives for joining us. And thank you to the audience for tuning in. This forum is not just about listening, it's about learning and growing together. And so we encourage you to actively participate in the sessions, ask questions, share your perspectives through the comment section on YouTube. We'll be posing some of your questions live to the executives here in the studio. And so be sure to get in your questions nice and early, because otherwise then the executives leave and then poor Kaya and Patricia have to answer all your tough questions themselves. But thank you once more for joining us. Looking forward to those questions. And thank you from myself, Sam Mokorosi.
South Africa, one of the world's fastest growing and most diverse emerging markets. With world-class infrastructure, sophisticated financial services and a progressive constitution, it's a gateway to African markets and the ideal investment destination for global investors. For over 135 years, the Johannesburg Stock Exchange has been a pillar of the South African economy, delivering an uninterrupted trading, clearing and settlement environment. Through our multifaceted business model, the JSE trades multiple asset classes and offers core issuer and investor services from listings to benchmarks and settlement. Operating in such a diverse economy gives JSE clients access to a broad range of issuers across industries through multiple asset classes. We support the ecosystem with innovations like virtual AGMs, industry training, and Share Hub. We also offer secure, efficient secondary capital markets across a diverse range of securities. Through the JSE co-location facilities, clients can host their infrastructure at the JSE and access high-speed, low-latency trading and market data. Clients can access live JSE market data through our London-based international access point, which facilitates connection from almost anywhere in the world. Our direct market access process allows clients to participate quickly and easily in the auction periods and continuous trading periods. The JSE's integrated trading and clearing capabilities deliver real-time clearing, allowing members to use cross-market trading strategies on a stable, functionally rich platform. And our world-class infrastructure technology systems safeguard operational resilience, especially in uncertain times. The JSE also offers a complex order suite that provides a secure, non-visible and regulated channel through which to execute big orders. This enables competitive trading strategies and improves the efficiency of filing large orders while minimizing impact. A variety of market data products is available to market professionals and data distributors, which includes live, non-live, end-of-day, and historical data. We have nearly 170 indices across a variety of methodologies and investment criteria. Our joint venture with FTSE Russell includes a range of world-class indices. Other available datasets include bond ETP data, tick data for most markets via the JSE Tick Data solution hosted by the CME Group, corporate actions, business intelligence reports, valuations data, and live data provision via our IAP. JSE Clear is the settlement authority for exchange-traded equities and the clearinghouse for the exchange-traded derivatives market. It clears and risk manages transactions in securities listed on the JSE. We have created an environment that enhances sustainability and disclosure, maintains the highest governance standards, and offers innovative products that allow investors and issuers to act on their sustainability needs. As a leading global exchange, we co-create, unlock value, and make real connections happen. JSE, let's connect.
Good morning, everybody, and a very warm welcome to the last investment forum for the year. I'm excited to also welcome my co-host Kaya. And for those who don't know him, he has an impressive resume. He's a chartered accountant, academic, activist, writer, and radio host. Together, we will be diving into the corporate updates for the companies that are presenting this morning. Kaya, great to have you on the show. Thank you for joining us yet again. What are your expectations for the show? And most importantly, have you prepared those difficult questions for the companies?
No, thank you, Patricia, and good morning to everyone. So, obviously, the expectation is to learn as much as we can about these particular businesses. I think we've got quite a very diverse set of very unique South African businesses and businesses with a very big global footprint. So, I'm actually quite excited to find out what it is that obviously, drives them and drives their leaders on an ongoing basis. And of course, there will be a couple of interesting questions that we have to prompt in order to be able to assist those that might be thinking about investing to be able to kind of figure out what it is that they need to know about these companies. So, of course, over the next couple of hours, what we will do is that we'll try to mirror the mood of the nation as the new government has indeed revived investor interest and appetite in the South African story, Patricia. I mean, as we speak, even now, our government is on a big national tour to China, where the president and his delegation are busy engaging with the political and economic leaders of China to talk all things bilateral and progressive. And also in our studio, we'll also be able to bring you 4 stellar businesses that are currently part of the JSE family and give you insights into what drives them forward, what their outlook is, and more importantly, why you should consider investing in this particular stock. So it's definitely going to be a good couple of hours for me, Patricia.
Thank you, and said like a true professional, and welcome back to the studio. So it definitely has been an interesting couple of months since we were last here. The political landscape looks remarkably different today, and in the wake of fluctuating global economic and political conditions, sentiment in South African equities has certainly seen some optimism. And it's with this backdrop that we bring you a great lineup of speakers today. The companies represent a combined market cap of 17 billion rand and span across a diverse sectors ranging from financial services, basic materials, and industrials. We have also decided to ask each presenter the same question, and that question is, if you had one superpower that would help your business, what would it be and why? So I'm hoping we get some good creative answers from our CEOs. And again, those that are online, please don't forget to submit your questions. Please don't wait for the presenter to finish the presentation before you submit. Make sure you get those questions in as early on as possible. So with that being said, our first presenter is in studio right after this video. in studio this morning, we have got Grant Dreyer, who's the Managing Director of Future Materials and Metals at Afrimat. Afrimat listed on the JSE in 2006 in the industrial sector. The company today has a market cap of 10.6 billion rand and has raised a total of 811 million rand since listing on the JSE. Afrimat is a leading South African construction and industrials company known for its commitments to sustainable development, innovation and excellence. The company operates across South Africa, providing a wide range of products such as aggregate, concrete products, such as ready-mix, as well as industrial materials. In the recent results, the group announced a revenue increase of 23.9% to 6.1 billion rand, up from 4.9 billion rand from the previous year. Together with an announcement following Afrimat's acquisition of Lafarge, which was approved by the Competition Tribunal and was given the green light. Now that we're in a couple months in, I'm sure Grant will tell us a little bit more about how that business is faring. We have Grant in studio today. Some good numbers have been reported by the group. Why don't you take us through your presentation this morning?
Thank you very much, Patricia, and good morning, viewers. Thank you, Kaya, and to the JSE for hosting us this morning. Before we head into the presentation, I just want to elaborate on your introduction, and for the viewers who are not that acquainted with Afrimat and the group. Yes, we listed in 2006. Primarily, Andries van Heerden, our CEO, had the idea of consolidating some quarrying businesses during the listing boom, initially only supplying construction materials, but over the last decade and a half, the group has really diversified through a number of acquisitions, still focusing on our core competency being open pit mining and really focusing on that mid-tier space. Over that, since 2009, we've enjoyed a compound annual growth rate of after-tax profits of almost 20%, with an average annual return on net assets of 28.5%. So the business is in a really, really healthy position. But before I spoil the presentation, let's head over to the slides. Just a disclaimer, we are currently in a closed period, so I won't be making any forward-looking statements or disclosing any price-sensitive information. The core message that I really want to leave you with today is that nimble repositioning, diversification, and growth through acquisitions, and a meticulous discipline on integration really is a fundamental strength the group has. Unfortunately, our first half of this financial year was impacted by external economic and market conditions, and we saw a reduction in the volumes. However, the company remains steadfastly focused on our culture, and our high standard of execution really supports the strategic moats around our business. Consciously making a difference through excellence with integrity is really why we exist. We call it the Afrimat way, and it's a set of beliefs that are endemic throughout the organization. It's about having great people that are good at what they're doing and really believe in making a positive impact, not just for our shareholders, but also within the communities that we operate. We've touched briefly on what it is we do. We're really focused on that mid-tier mining space, not really competing with the larger Anglos of the world, but really finding niche opportunities in markets where we can extract value. In terms of the group structure, you can see the diverse nature of our business with the four core business units. On the left-hand side, we've got our construction materials business, which now includes the incorporation of the Lafarge business, not only the quarries, but also the cement assets and the fly ash, really augmenting and bolstering that side of the business. And we're excited about the prospects that will bring for us. Our industrial minerals business, really including our limestone, dolomite, and industrial sands operations, bulk commodities, which really forms the majority of our business at this stage, which includes our iron ore operations, anthracite, and manganese. And then on the last division, our future materials and metals business, really diversifying Afrimat's exposure to the ferrous metal sector and aligning us with global trends, specifically relating to food security and the decarbonisation or the energy transition with the production of rare earth elements. These assets jointly have provided us in the latest set of financials a return on net operating assets of about 25.6%. So really good going into the new year. The rationale for and the result of our diversification structure really can be showed with this one chart. where you can see the headline earnings per share of the traditional business in blue without the acquisitions versus the headline earnings per share of the current business, including the acquisitions in red. And you can really see that those acquisitions on the right really have enabled the growth over the last decade or so. These acquisitions have also provided us with a good blend of local and internationally priced commodities, and they've allowed the group to have exposure to different currencies and different economic cycles. Important to note is that all of these acquisitions actually have a similar skill set requirement, and it really is about leveraging our core competence in our operations. These opportunities have also created new opportunities, almost acting as springboards for growth. An example of that is the acquisition of Demoneng in 2015 really created a growth platform for us to expand our operations in the Northern Cape, specifically iron ore and manganese. As you can see, the cumulative average growth rate of after-tax profits around 19% from that 2009 period. So the strategy is really working for us. We really focused, the group is really focused on enhancing our strategic moats. We do this by focusing on three areas. Our sources of competitive advantage, firstly. Culture, I've spoken about. It really is about what the way we do things, and it's at the core of what we do. And then when we look at opportunities, we really look at a combination of three aspects. Either a unique metallurgy, whether it's the pozzolanic nature of our clinker business or the high quality iron ore produced out of our Northern Cape operations, a structural cost advantage for obvious reasons, or a geographic location that gives us a zone of natural advantage versus our competitors. Secondly, we focus on how we allocate capital and how disciplined we manage our balance sheet, ensuring that we can really weather any potential storms, as well as capitalize on opportunities when they do arise. Making sure that our assets really work for us, maintaining a strong return on net assets, and ensuring that we generate cash consistently. And then lastly, execution. This is really about our operational excellence, and it's a multidisciplined approach to how we plan our projects, really incorporating all processes and aspects into our plans, and then resiliently and in a disciplined manner executing those plans. And these three areas really help us strengthen those strategic moats around our business. Just some financial highlights from the latest set of results for the reporting period ending February 2024. Group revenue up. Patricia, you mentioned this already. Our headline earnings per share up 24%, and the board declared a dividend in line with our dividend policy of 2.75 times cover. Healthy operating profit margin. Our return on net operating assets really healthy. Both those two metrics really showing that our strategy, our diversification strategy, is really working for us. A healthy balance sheet with a gearing or the net debt to equity of 1.4%. That'll be slightly up given the Lafarge acquisition and the last payment we've made for the Glenover transaction. But that net cash from operating activities really helping us to pay down that debt fairly quickly. From a segmental point of view, on the left you'll see our revenue contribution, and here we've got a really good mix of assets making up our portfolio. On the right, interesting to note, our construction materials business really had a great year. Not only was revenue up, but our operating profit margin in that business was up almost 111%. Really speaking to the team's ability to drive those operational efficiencies and a really great year. Our industrial minerals business, you'll see, didn't have such a great year, primarily because of load shedding, which impacted not only our operations but also our customers' operations. And what you can see is the bulk commodities business contributing more than 80% of the operating profit. Iron ore volumes, in terms of local sales, were up, with exports slightly down. But compared to the previous year, we did well. On the anthracite side, Nkomati really started delivering at the end of last year, So we're excited about that business. And then the future materials and metals business really in startup phase, making some startup losses towards the end of the year. Just looking at some key metrics that we like to focus on and really speaks to Afrimat's track record. You'll see on the left-hand side our growth in net cash from operating activities, really talking to the team's ability to turn our acquisitions into meaningful cash-generating assets over time. On the right-hand side, our operating margin really sustained over that period of time. Speaks to the diversification strategy and the operational efficiency drive the teams have been implementing, really making sure that we're still making healthy profits regardless of the economic cycle that we're in. Our sustained return on net operating assets really talks to our ability to allocate capital and extract value from our investments. Really healthy over that period at an average of 28.9%. And then lastly, managing our balance sheet in a disciplined manner over time has meant that we could weather potential economic storms as well as exploit opportunities when they arise in a quick manner. An example of an operational efficiency project that the team implemented was using technology to look at the reduction of diesel costs in our operations, specifically reducing cycle times or idle times in the three operations represented here. And what it has meant that is over the last 2.5 years, we've had almost a 10 million litre diesel saving, which has been tremendous considering in that period there were sharp diesel increases. So that had a material impact on our business. What we're showing here is on a more granular level, really improving the tonne per machine hour. We actually have a reduction in the cost per tonne. Specifically here, we're showing the hauling rates or hauling cost per tonne on our sites, which had a material impact on our efficiencies. So where are we headed in our closed period? Obviously, we are already in the closed period. But on the construction material side of the business, we saw volumes in Q1 being maintained similar to last year. By Q2, the integration of the Lafarge quarries really increased volumes. And true to Afrimat's ethos in terms of job creation and economic empowerment, there were some key appointments made in that business. The integration of the acquisition is ongoing and we're making good progress to reduce the losses specifically on the cement business, but we really are excited about this business really starting to meaningfully contribute in the future. On the industrial minerals side, the suspension of load shedding has had a really positive impact, not only for us, but also for our customers, and we're seeing those volumes come through. And there have been some exciting new market developments that the team has been working on. On the commodity side, international iron ore volumes were down about 20% in Q1 or the first half of this year, primarily due to the poor performance of the Sishen-Saldanha railway line. We are not bullish on seeing those volumes return, but we are working closely with Transnet and we do support Michelle Phillips and her team in getting that line to perform at the standard it should be. Local iron ore volumes were substantially down in Q1, almost 70%, due to some operational challenges at ArcelorMittal, which are well documented in their public disclosures. We have seen, however, that in Q2 those volumes starting to return and they are tracking towards the normal levels. Production at our Nkomati operation, specifically on the open pit side, have been ramped up. But the underground operation still remains a challenge. On the future materials and metals business, we have commissioned our fertilizer plant producing single superphosphates. We are seeing some sales volumes come through for that business ahead of the agricultural season, and the rare earth side of or component of that business is still being developed with test work, with ongoing test work and research to make sure that we really extract full value from that business. What do we expect for the second half of this year? Improved local iron ore sales volumes as those operations return to steady state. increased exports from Nkomati, specifically in addition to local sales. We're targeting 3 shipments for the second half of this year. On the iron ore export volume, similar to last year, and then really making good progress on the Lafarge integration and eliminating those losses in the cement business. We're really excited about that business starting to meaningfully contribute. So again, the core message that I'd like to leave with our viewers is that nimble repositioning, diversification and growth through acquisitions really remains a strength of fundamental strength of our group. However, external economic and market conditions did have a material impact on our business in the first half, but that company culture and our high standard of execution really supports the strategic moats we have around our business. Thank you.
Thank you for that, Grant. Great presentations. Well, Kaya, I'm going to hand straight over to you. I do have 1 or 2 questions, over and above our special question that we have, but I'll let you ask all the difficult ones.
Yeah, no, thanks for that. I mean, Grant, what fascinated me about your business is obviously that curve that you showed us, just how big the impact of acquisitions has been. I mean, a lot of people do multiple acquisitions over many years. Sometimes it's at the wrong cycle, sometimes at the wrong price. You guys seem to have found the science behind it. How have you mastered that?
I think it really is about staying humble and understanding what our core competencies are, not really stretching that capability too far, and then about understanding our external environment, making sure that we take all our factors into consideration when we actually go after an opportunity, and making sure that we have the right people to execute on that opportunity and extract full value.
Yeah, and I think obviously at some point in time when there was upheavals in the economy at large and in the construction sector, there probably would have been a lot of viable assets that you said, look, we'll ride the wave and we'll be able to carry this going forward. Is there still a big market for that, or have you probably seen the topping up of that cycle where now everything is reaching some steady state?
Yeah, so I think every commodity has a different cycle, which is where we actually see more opportunity to diversify the business in the future. However, we do remain focused on our core competency, specifically on that open pit mining and operational excellence factors. So we have a strong pipeline of current opportunities that we need to bed down, but we do have a dedicated business development team that looks at new opportunities in different cycles, making sure that we can operate at a low cost, even through the bottom of the cycle.
Yeah, and obviously you've also undertaken not only geographic diversification but also earnings diversification as a consequence of that. Do you think you've probably found the right hedges between the different businesses, the different locations, and obviously the different cycles that you're exposed to?
Well, I think the track record in our headline earnings per share is indicative of that. Sovereign risk, having 100% sovereign risk in a company, is dangerous, we believe. And I think the team has done exceptionally well in diversifying the business over the last decade and a half, getting us that exposure so that we can smooth our earnings over time.
Patricia spoke about, the great optimism of current days, which is either, on the political front and also on the economic front. But I think probably one example of that is that for some reason, load shedding has ended. We don't know if it's a permanent solution, but I mean, how does it affect a business like yours? I mean, you mentioned in a couple of slides, but I mean, what are your expectations? Is this now the end of that chaos, or is it simply a matter of somebody has found a solution? I don't know what the solution is. I saw diesel and I was like, could that be? But anyway, that's a story for another day. What are your expectations?
Yeah, so it's difficult to make a prediction on that front, specifically with government involvement, but we have seen a tremendous improvement. And specifically in businesses like our industrial minerals business, where we incorporated generators to run those operations at a high cost and diesel use, we've seen actually, the impact of the reduction in load shedding impacting not only us but also our customers. So those volumes have increased nicely. Going forward, we believe that the tremendous increase in renewable projects have a dramatic impact on the South African economy. So we are positive.
Yeah. You spoke earlier on about some of the external factors that tend to affect a business like yours, but there's also perhaps a blend of internal and external, and it's probably relations with communities, relations with staff and all of that. I saw in your slide that you mentioned how important it is to you guys to make sure that you maintain the right community relations and the right authority relations. How's that that relationship at this stage?
It's of utmost importance. It's our social license to operate. And it's actually for Afrimat a major source of our competitive advantage. I think the Minerals Council did a study where they indicated that for every one direct job that the mining industry gives, there are about 10,000 dependents. So the impact that Afrimat as a group or mining businesses make within the South African landscape is tremendous. We have very good relationships within all the communities that we operate, and it remains a key fundamental strength of our business.
Now we're almost running out of time, so I do want to get to our question. So if you had a superpower that would help your business, what would it be and why? I don't know whether you've had a chance to think about it.
No, so I have, and I think it comes down to getting tomorrow's newspaper today. It would help us inform where the world is going, make strategic acquisitions, specifically enabling perfect timing. So.
Well, there you go. Thank you very much, Grant. Obviously, a lot more to come.
Yeah.
Diversification, definitely a key theme in terms of your presentation. So thank you very much for joining us in studio today. And we'll have a look at the next company right after the break.
Thank you, Patricia. Thank you, Kai.
Great. Now for our next presenter, we have got Vunani in studio. They have a market cap of 344 million and are listed in the financial services sector. Founded in the late 1990s, Vunani was listed on the JSE's Altex in 2007. Vunani Limited is a diversified financial services group, majority black-owned and managed, with a very strong focus on entrepreneurship and innovation. Vunani operates in various sectors, including fund management, private wealth, and insurance, and has offices in Johannesburg, Cape Town, and Harare. We have Taf today, who is the CFO, in studio, who will be taking us through his recent business developments. Welcome to the studio.
Thank you. Good morning, everybody, and thank you for taking time to tune into the show. Vunani Limited is a diverse financial services group which has been listed on the JSE for the last 17 years. I think we have 353 staff, basically in Cape Town, Johannesburg, Gaborone, Babane, and we are currently looking at setting up offices in Namibia. I think the sort of key items about the group, I think we are 68% black-owned. I think with a lot of emphasis on owner-managed culture. So what you'd find in all our businesses, we would have key management as part of as stakeholders in the business, as well as at the listed company. We are continually focusing on expanding our financial services activities, and we have. If we look at the sort of like key business segments, we are in the fund management segment, our asset administration segment, as well as investment banking and insurance. If we look at the sort of our key operations, our fund management segment is based. We have two main operations that are based in Botswana and in Cape Town. We have the Cape Town business currently provides a range of retail products to both institutional clients and retail clients, including retirement funds, medical aid schemes, and parastatals. We have capabilities in both domestic and global aspects of the fund management business. And as of at the end of July, the team was managing around 40.6 billion in third-party funds across the various asset classes. The other business in this segment is the Botswana Vunani Fund Managers in Botswana. Similarly, they also manage money through unit trusts and segregated portfolio of assets with a focus on money market, income, managed equity and segregated funds. This is currently at about 8.5 billion and is currently on a good trajectory in terms of growth. If we move on to the next business segment, it's our asset administration segment. I think this is made up of the main business here is Fairheads Benefit Services. Fairheads is a niche trust and beneficiary fund administrator who is responsible for administering funds on behalf of minors, dependents of deceased retirement fund members. We basically service two client groups, being the members and the guardians who receive the monthly sort of income from the funds, and then the company's trustees that are responsible for the allocations. I think the sort of key focus there is to provide quality service to the members so that they can continue to live a good life after the passing of their guardians. We are also, the Fairheads is also the largest independent fund manager in the market. We currently own about 52% of the market share, and I think we have a good track record in this aspect in the market. We're also currently administrating about 10.5 billion on behalf of 100,000 dependents. So this is critical that we do this in an efficient way and continue to service the dependents on a monthly basis. Currently, we have been adding additional products to this business, which include annuity products, unclaimed benefit funds, pension-backed home loans, preservation funds, testamentary trusts, as well as medical malpractice and road accident trusts. If I move on to the next sort of business segment, that is our investment banking segment. This is made up of three businesses. Our corporate finance team, which provides services in corporate finance and advisory. They're currently a JSE and A4X sponsor, and provide services including listings and ongoing obligations for their clients. They also have capabilities in capital raising for either listed or unlisted funds, and equity, mezzanine, and debt. We are able to also assist in mergers and acquisitions, i.e. identifying targets, assisting with transaction strategy, and structuring the whole transaction. Similarly, we also have capabilities in disposals, finding buyers, preparing information memos, valuations, and evaluating offers. The next business in our investment banking segment are our Vunani Securities, Vunani Capital Markets. Vunani Securities is a JSE stockbroker. They primary key services are providing stockbroking services for their clients, both mainly institutional and some retail capabilities. And there's a focus on equity trading, index futures, single stock futures, and so on. Vunani Securities is also in a sort of unique position where it has a training academy, which has been quite successful over the last years. Effectively, the guys would come in, we would look for students that went to maybe the sort of like second and third tier universities, invite them to get them trained up to become analysts, and then after that, they would either continue with the group or move on to other businesses. So I think from inception, we have produced 20 analysts who have gone on to do quite well in the sort of financial services industry. The other business that is in the investment banking segment is the Vunani Capital Markets. Here they have mainly deal in money market trades, bond markets, and their services has been quite exceptional. The team has always been recognized historically in the top 10 financial mail rankings of the fixed interest services. So it shows that even though the team is quite small itself, they are able to provide quality service that is recognized in the market. The next sort of business segment is our insurance segment. This segment is based in Eswatini. They provide insurance services. Basically, there's two businesses there. The Oracle Insure, which deals with short-term commercial insurance, that basically any sort of short-term car, housing, contents, businesses, business electronic equipment, I think, as well as any public liability insurance. I think sort of key element with this sort of business is that they are a dominant player in the market with a lot of emphasis on technology and partnering with the right other service providers to ensure a quality service is provided to their clients. The other business is in Eswatini, relates to the Oracle Life. They provide effectively two long-term insurance in the form of life products, where you provide group life assurance, group life cover, funeral cover, and income continuation benefits, as well as pension and provident funds. So with the focus on making sure that employees can retire comfortably by investing in the right sort of retirement products. In terms of where the group is right now, I think we are focusing on growing the group. I think organically. I think there's been a lot of emphasis over the last sort of couple of years of investing in our people, investing in technology to try and grow the group that way. Similarly, we are always looking for acquisitions. I think with an emphasis on businesses that would be able to add on to our financial services, not exactly same sort of businesses that we have, but things that we can add on to improve the sort of service offering. So I'll stop there. So thank you.
Thank you very much for that presentation. And I'm going to hand over to Kaya. I'm sure you got a couple of questions. I mean, it's quite interesting around the acquisitions, which I'm sure we'll get into. Maybe you can give a little bit more hints in terms of specific sector. But Kaya, over to you.
No, thank you very much for that. I think obviously it is a diversification of this business that is obviously a big selling point. But just talk us through your acquisition model and your acquisition philosophy as a business. Is it simply a matter of, well, let us just grow in as fast as we can in different markets? Or do you try to figure out where the market is leading or heading and then say, that's where we'd like to be?
Okay, so in terms of our acquisition strategy, it's sort of two-faceted. What we've seen is that there's a lot of opportunities in Africa, or mainly SADC. Our sort of recent acquisitions have been in Botswana, where we bought the fund management business, and then in Eswatini as well. So what we tend to look at is, how quickly can we get to that country? So ideally 2 hours, maximum in terms of getting to the country. And what we find that in the countries that are around South Africa, there's opportunities in terms of growth, mainly because what you'd find, like for example in Botswana, the fees in a fund management business would be higher than what you would get in South Africa. So even though the AUM might be lower, what you find is that you generate a higher revenue, in that sort of business. So that is the one sort of aspect that we are continuing to look at. We're looking at opportunities in Namibia, looking at opportunities in Lesotho, to try and see where we can add on to the group. But in terms of businesses, it would be still in financial services, but I think the focus is on asset gathering businesses, fund management, insurance, where they pool assets, because we believe that if you have those that pool, you can then be able to add on. In the sort of financial services aspect, I think critical mass is ideal, and we believe that we need to be willing to look outside of South Africa if we're going to achieve the sort of growth. And I think sort of challenges that you would find in South Africa is that this is very competitive, and obviously there's much pricing is also an issue in terms of doing transactions, and that's the sort of thinking there. So definitely more in financial, but more niche businesses that would specialize in maybe, again, for example, maybe a specific sector of fund management. That is what we would look at. Than a general, let's go and buy a big fund management business.
And obviously all these different markets have got a different maturity profile, and the depth of the market is quite different. Do you then find that you have to exhibit some element of cost leadership in order to be able to get the right volumes and to get some sustainability in those markets?
Yeah, so what you find is that when we go into these markets, I think one of the key things is that what we look at is identifying the right sort of leadership in terms of when we partner up, we want strong leaders that have a deep sort of understanding of the markets. So the current CEO of fund management business had been in that business for 10, 15 years, and he then has insights of how the market works, a deep understanding of all the legislation. So what we then do is ensure that we would partner, so that guy or whoever we partner with in management would have a stake in the business, so that everybody has a vested interest in ensuring that we do well, short term and long term. So that's the sort of key, and constantly going in country to meet with the various stakeholders, the regulators, and other key stakeholders in country is sort of critical to our business strategy.
On the local market, we're obviously going through the latest version of the pension fund reforms. There have been so many since 1956. I can't keep up, but obviously everyone's talking about the two-pot one. Does this represent opportunities for you guys on the fund administration side?
Yes, it does. I think what it does is twofold. Obviously, with the two-part system, the withdrawals represent an opportunity because there are costs associated in sort of withdrawing the funds. So we believe that there's an opportunity there. Also, with the splitting of the funds, we believe that we can look at how do we try and maximize on that, because all of a sudden, when you had one fund, now all of a sudden you have two funds, which creates an additional administrative burden, and we believe that there will be opportunities there in terms of fees on that aspect.
I think also I was in a webinar last week where some of the panelists spoke about why you'd probably have to adopt different investment strategies. So if I thought I was 30 years old, you can essentially park my money away in the longest dated investments that you can. But right now I may come back in 12 months' time and say, can I dip in? So therefore that obviously alters the investment strategies. Is this something that you guys have been working on to get yourselves ready?
I think yes. I think we will provide our clients with different sort of fund strategies. I think it does change. I think the sort of key aspect is understanding what our clients, how they will operate. So we don't really fully know the impact of how many people are actually going to be utilizing it. And I think that will also sort of drive the strategy. Once we have a firmer feel, a better feel of that aspect, I think it'll be easier to sort of drive the strategy. But obviously, there'll be a lot of emphasis on short-term sort of money market sort of products with high liquidity will be where we would focus the this new saving spot.
Yeah.
You know, you definitely need that liquidity in the market.
Okay.
Right. Well, I think we've run out of time, but I do still want to ask our question.
Yeah.
I don't know, Tabs, whether you heard us while you were waiting, but we have decided to ask each and every presenter, we might be putting you on the spot here, is to say, if you had one superpower that would help your business, what would it be and why?
I would wish to be a very good asset gatherer.
There you go.
Because we believe that the more assets we have, the bigger we are. Critical mass, sort of critical in our business.
It's
so
a
that
bonus
is
game.
that is my one wish.
Well,
so
there
hopefully
you
I'll get
go.
that.
Asset gathering. Thank you so much for joining us in studio today, Tafs. Of course, if you are watching, it's a very clear signal that you are looking for asset gathering types of businesses. Hopefully, you know, those type of companies will be contacting you after the show. So thank you very much for joining us in studio, and we will have our next presenter right after this break.
Thank you very much.
Next up, we have Tharisa PLC, which listed on the JSE in 2014 in the basic materials sector, currently has a market cap of 5.7 billion rand. Tharisa is an integrated resource group involved in mining, processing, exploration, beneficiation, and logistics of PGM and chrome concentrates. The company operates an open pit mine located in the southwestern limb of the Bushveld complex in South Africa. Tharisa has accelerated its decarbonisation strategy by signing a wind and solar wheeling agreement on the 25th of July of this year. We have Michael Jones, who is the CFO, in studio with us today, who will take us through his presentation. Welcome, Michael.
Thank you and good morning. And thank you for inviting Tharisa to present the investment thesis at this forum hosted by the Johannesburg Stock Exchange. Who is Tharisa? Tharisa is a mine builder and operator. We have long life assets, large scale operations, and they're really multi-generational assets, and we produce strategic commodities. Our primary asset is the Tharisa mine. The Tharisa mine is situated on the western limb of the Bushveld complex. It is a large-scale open-pit mine, mining platinum group metals and chrome concentrates. Platinum group metals are used in the manufacture of autocatalytic converters, primarily used by the motor industry in cleaning up the emissions on the internal combustion engines. Chrome is used in the manufacture of stainless steel, so without chrome, you do not have stainless steel. In addition, we have the Karo Platinum Project. It is a world-class tier asset. It's a development asset on the Great Dyke in Zimbabwe. We have undertaken pilot mining, and we're in the process of early-stage construction at the site itself. We're in the process of finalizing the negotiations with the government on the benefits. They are also a shareholder in that particular project. In addition to that, we are finalizing the funding for that particular project. We do look at using innovation and technology to unlock value for our shareholders as we develop our projects, and that is both at the project level itself and in beneficiation. We also have a commitment to reduce our carbon emissions by 30% by the year 2030, and the number of key initiatives that we have undertaken to ensure that we achieve this objective, including recently signing a electricity wheeling agreement with a wind farm and solar project. And in addition to that, we have permission and are in the process of finalizing the agreements for the construction of a 40 megawatt solar plant at the Tharisa mine itself. Looking forward, our Vision 2025, we are delivering on our Vision 2025, and I'm going to touch on a number of the pillars of our vision as we go through and give examples of what we have done over this past period. Expansion, we're expanding, rolling out our business sustainably. So at the Tharisa mine itself, it is a large-scale open pit mine, 13 years worth of open pit, but we have already started and almost completed the studies to progress underground on portion of the mine, which will increase our mining footprint by an excess of 60 years. We continue to strive to optimize our existing operations. We have a low-grade ore body of both platinum group metals and chrome concentrates, and therefore we want to optimize and maximize the value extraction from our operations itself. So in the recent past, we have finalized a proprietary technology for the recovery of fine chrome, and that's one example, increasing our chrome production by some 10%. And historically, this product would have been moved onto the tailing storage facilities. We continue to invest in innovative thinking, and here again, it's in downstream beneficiation in particular. We've recently announced the smelting of our own chrome alloy and the commercialization thereof. We have a 1 megawatt DC furnace for the smelting of platinum group metal alloys, and that is now a proven technology, and we're now moving to the next stage so that we are able to do our own precious metal refining. In addition, we have a company called Redox One, and that is a company that is really focused on a long-term storage for electricity using chrome as the main power source. We are on our journey to become a globally diversified business, and this has started with the geographic diversification into Zimbabwe with Karo Platinum, and will continue to diversify both in terms of product and in terms of the geographic locations. We do strive to be the investment of choice in our chosen sector, and we really focus on our capital discipline in terms of ensuring that we invest in the sustainability of operations, plus growth projects, and also ensure that we return funds to shareholders as well. We also seek to responsibly enrich the lives of all of our stakeholders, and this isn't just our shareholders, this also includes our employees, our suppliers, as well as the communities in the areas in which we operate. I'd like to just give an order of magnitude of our business itself and touch on just a few numbers. The production guidance for FY 2024, our financial year end of September, is between 145,000 and 155,000 ounces of platinum group metals. Once Karo Platinum is in full production, we'll more than double that overall PGM production, with the Karo project planned to produce about 200,000 ounces per annum of platinum group metals. In addition, on the chrome front, we produce 1.7 million tons to 1.8 million tons of chrome concentrates, and that's our target for our current financial year. Again, to give an order of magnitude in terms of financial performance, our financial period is 30 September, so these figures are for 31 March, our half-year period. You'll see their revenue of $369.1 million, EBITDA 79.6 million, and net cash from operating activities of $86.2 million. We're very pleased with this performance and financial performance over that 6-month period, and that's really in the back of the commodity cycles in which we operated, and again proving the resilience of our co-product business model. With the co-extraction of both PGMs and chrome concentrates, we're all very well aware that the PGM market has been under severe pricing pressure over this period, and we really benefited from the resilience of the chrome market and the support we got from the chrome pricing. Notwithstanding this commodity price cycle, we continue to invest in our business operations, having invested $114.1 million in capital expenditure over the 6-month period. And that included $63.1 million in Karo Platinum, which is a growth asset. Our balance sheet remains strong. We have cash and cash equivalents of $198.5 million. And as mentioned earlier, we ensure that we do return funds to shareholders. We do have a dividend policy of returning at least 15% of consolidated net profit after tax. We do declare an interim dividend as well as a final dividend, and we've recently successfully concluded a share repurchase program of $5 million. We do believe in the fundamentals and the long-term fundamentals of our commodities. And just briefly on the PGM front, Our view is that the primary supply reduction will be a main catalyst for PGM price increases. If we look at the current pricing environment for PGMs, there has been a delay in curtailment by primary producers of platinum, and would therefore expect to see this impacting on the prices as demand continues to grow. The internal combustion engine remains a major demand driver, with our Tier 4 and Euro 7 emission standards still to come, and also over 2023, there was an increase in automotive sales of up to 92 million vehicles recorded. There was an expectation that battery electric vehicles uptake would be significantly higher than it currently is. There has been a slowdown, and really from a motor vehicle manufacturing perspective, they're really now focusing on hybrid solutions, which is battery electric vehicles, which still requires significant loadings of PGM in the autocatalytic converters and in the fuel cells. In addition, the hydrogen economy, we believe, will still provide multi-decade PGM demand going forward. And this really supports a longer-term view on the pricing for PGMs and our belief in the sustainability of that sector. In terms of chrome, there's no substitute for chrome in stainless steel. The stainless steel demand growth in China in particular was up some 5% in 2023, and the chrome prices have really remained extremely robust on the back of low port stocks, which is the port stocks maintained in the Chinese ports for their own smelting operations. And South Africa itself supplies some 80% of China's chrome needs, with China itself having no chrome reserves. Tharisa does supply some 10% of China's and Indonesia's chrome demand, so a significant producer in the markets in which we operate. In terms of our investment thesis, we are a long-term value play. We do produce critical commodities, so the co-production of the platinum group metals and chrome concentrates are critical to a sustainable future going forward. And if we look at our output, particularly on the platinum group metal side, that is expected to double as we bring the Karo Platinum project on stream. We also have operational flexibility. The Tharisa mine is currently a large-scale open-pit mine with operational flexibility, mechanized operations, a consistent tabular shallow ore body, and we're also going to replicate the lessons learned in the construction at Karo Platinum. We have maintained our capital discipline throughout. We continue to allocate capital to stay in business, to ensure the sustainability of our business, growth to achieve our growth strategies, and also ensure returning to shareholders with our policy returning at least 15% as a dividend to our shareholders. I haven't spent much time talking about integrated marketing and sales and logistical support, but we do have a mine to port strategy, particularly on the chrome front, where the primary customers are in China. I think we're all very well aware of the infrastructure constraints within the South African market, and historically we shipped the goods down to port at Richards Bay by rail. That has primarily moved to road freight transport, and we now export via Maputo, some 40%, as well as Richards Bay and also from Durban. So logistics has performed well in ensuring that we have sustained and met all the demand and delivery schedules for our chrome products. In terms of long-term value play, we have diversification, the beneficiation energy transition, and we're really maximizing the value of our commodities by using innovation and technology to unlock value for our shareholders. In summary, it's a brief overview of the company itself. We are an end-to-end critical metals and energy solution provider. We innovate the resources company of the future. And just some statistics in terms of our actual history. We have been in operation for some 15 years. We've been cash generative for some 10 years of that, including the build phase of the plant. We've been profitable for 9 years, and we returned in excess of $100 million to shareholders. In terms of capital invested, we have invested in excess of $695 million. And I think I'd just like to really end on one slide, and that is that this year we were listed for 10 years on the Johannesburg Stock Exchange. We celebrated it earlier this year. And you'll see there on the photograph the same team in many respects, the founding shareholder, the Perulis family, still very involved. as well as the rest of the team there celebrating this 10-year that we did achieve. Thank you very much, and I will now open for any questions.
No, thank you very much for that.
Maybe before we ask our questions, let's just remind the viewers online to submit their questions online. So as we are asking the questions, make sure that you get them through to us so that we can ask Michael in studio while he's here with us your question.
Yeah, definitely want to be able to take some of those questions. Michael, thank you very much for that. I think obviously for me, what's always intriguing about businesses of your nature is the question of the diversification, the beneficiation, and indeed the transition. You did mention that obviously you all have a 2030 strategy, but I think what a lot of people tend to struggle with is that, look, you simply need to be able to find better ways of extracting some of these commodities and getting some of these products to the market. What are the plans out there in order to ensure that the business is viable but also is greener going forward?
In terms of the greener going forward, as I said, we do have a strategy. We have signed an agreement with Etana, which is an electricity trader. They generate wind power and solar power in the Northern Cape. We have an agreement with them that will provide some 40% of our power requirements going forward. We also have the approvals, environmental approvals. We finalized in the last ones to construct a 40 megawatt solar power station at the mine itself. So that will be ongoing, and that will also reduce our power consumption and achieve that objective. I think, though, if we look at the reality of an open pit, our largest fuel or energy user is in fact the fuel, the yellow fleet in pits and mine. And we are working with a number of the original equipment manufacturers on various initiatives. They're well aware of what needs to be achieved. We would like to see it going more hydrogen. I mean, that's selfish because that produces a circular economy, because hydrogen needs lots of platinum group metals, and therefore we'd have a circular economy. We have also trialed and tested a number of electric vehicles in terms of the pit itself. So there's really a lot of focus, together with working with the OEMs, on ensuring that we are greener going forward. If we look at the innovation, and it's really our drive to minimize the ounces or the tons of chrome that we put in our tailing storage facility, because that's a true metric. We have a finite resource that we need to work with and extract maximum value from it. So I mean, if we have a look at some of the initiatives, whether it is on the PGMs where we've put high energy flotation cells in, or the chrome and the fine chrome recovery circuits that we've developed, and we deliver a recovering chrome that is extremely fine. It hasn't really been achieved in the industry beforehand, and we have successfully achieved that. That's proprietary processes. Our strategy is also to go into downstream beneficiation. We have tested a 1 megawatt DC furnace on PGM alloys. It has been proven. We are now going to the next stage of building a significant pilot plant to effectively test that and prove that for our own material and for the material coming through from the Kara Platinum project. And on the chrome, as I mentioned earlier, we have the chrome alloys. Now, the one that we really didn't spend much time on, it's a topic of its own, is redox 1. I think we're all very well aware of the vanadium redox flow batteries, where they use vanadium as the base effect or base load for the power, which is extremely expensive. We have technology, and we're busy proving it with pilot plants. We have 3 plants that's operating at the moment, to use chrome as the base. Much more economical, much more cost effective, and so far the tests are proving very successful. So there again, an end product for the chrome that we produce being used downstream. So there's a lot of value going from there. Sorry, a long answer to your question.
And the beneficiation question, I mean, it's clearly a big issue in South Africa. For many years, people have been saying we need to do better, we need to do things differently. As a business, what exactly is your plan towards saying, look, let us do what we can in order to obviously try and maybe localize as much of the value chains as possible? I was actually quite surprised to realize that China essentially depends on everybody else for chrome, because everyone assumes China has everything else and then everybody else, consumes it. But clearly, in relation to that dimension, it's the opposite. Are we getting the benefit of that?
From the PGM side, I do believe we are getting the full benefit, because we sell our products in terms of offtake agreements to Northam and Sibanye, so that is a full beneficiation in country. On the chrome side, it has been unfortunate that we do export it's, I suppose, semi-beneficiated in terms of being a concentrate, but not the final product. And that has really been impacted by the electricity constraints within country. To make ferrochrome, you need a lot of power. So what have we done to do that? We have now looked at processes that use less electricity. So the unique proprietary technology we've just developed for the chrome alloys that we produced are a step in the right direction. Taking off products and making electrolyte for the batteries that we're going to be using in chrome, again, is beneficiation. Much of that will take place within South Africa. But unfortunately, I think the history in terms of ferrochrome smelts and economics of it is going to cause us to still rely on exporting the concentrate as opposed to the final product.
Yeah, and does that require an entire industry or a sector to shift and say, how do we collaborate and actually turn that around, or is it simply a matter of the economics will simply just never be in our favor?
I think until we resolve the power problem in South Africa, and yes, at the moment we've been blessed, I think, with not having any load shedding for some considerable time. It's 160 days. We look forward to it, but that's also on the back of low economic growth, so reduced demand. And if you look at the power projects that the major manufacturers are putting in place, I think that has also relieved a lot of the pressure on the grid, and not to mention what the domestic users have done in terms of Flywissa, Joburg, and see all the solar panels, and that's all reduction on use. So I think the concern we still have is that the long-term sustainability of those power-hungry operations, till we've got the technology proven to reduce that power, I think that we have to rely on that export at the moment.
South Africa doesn't do singular problems, we do multiple problems at the same time. The rail and logistics issues and those challenges, are they still a big problem statement for a business of yours?
I think they're a big problem statement for the country as a whole. We have I have to give credit to our logistics team. They've really worked really hard. I'm give an example. 3 years ago, 80% of our chrome went by rail to Richards Bay from Marikana siding. We now move about 80% by road. Now, that's not good for our infrastructure at all. But the port at Richards Bay is designed for bulk shipments, not for trucks. So you have these long queues of trucks and so forth. So as an industry, we have moved across to Maputo. That does move smoothly across the border. And there we're now moving about 40% of our chrome concentrates. Shipping is on time. The port is well run. They do have private investment partners in there. And I'm pleased to say that has worked very well. Some initial teething problems with long border queues, but works well. So we've worked our way around it. But ultimately, we need to see the investment by government and private sector in the rail infrastructure and the port infrastructure. We have the assets, we need to optimize them.
Great. We've run out of time. We do have one question that we want to ask you just to keep it a little bit more fun. And I don't know whether you have heard this question, but we are asking all our presenters that if you had a superpower that would help your business, what would it be and why? And I'm wondering whether the rail, or let me not preempt you there.
Superpower, what it would be. That would be a very difficult one to answer. Superpower, I'd really like to see the platinum group metal prices recover to where they need to be in terms of the market, so that you do have the investment. We would like to see the project in Zimbabwe come to fruition. To me, it's about making a difference, and in Zimbabwe, it would make a difference not only to the community, but to the country as a whole. In terms of GDP contribution, forex contribution, and so forth. So to me, I know it's not a very long-term super goal, but I'd really like to see that project built and the benefits flow to Zimbabwe and making a real difference to that country as a whole.
Yeah.
Well, there you go. Thank you very much, Michael, for joining us in studio today. Kaya, definitely some good presentations so far. We just want to get those online questions in on time, and we will have our last presenter for today after this break.
The future of your business relies on your ability to integrate digital technologies into your operations. Combining market-leading solutions with deep domain expertise to create intelligent, agile, and profitable organizations. Foresight gives you the visibility you need to make informed decisions and develop effective, sustainable strategies. With the ultimate AI goal of enhancing productivity for us all. Increasing business efficiency through automation, saving time and optimizing resources while improving data analysis, insights, and predictive analytics. Start your digital transformation journey with the uniquely developed Transformational Assessment to achieve optimal output and make your digital journey self-funding. Experience avenues for growth and digital innovation to keep your business relevant. Digitalize today to future-proof the way forward. Future, forward, foresight.
Great. We have our last presenter in studio today, a return. We do have Foresight Holdings, which is listed in the financial sector and currently has a market capitalization of 379 million rand. Foresight operates in the technology sector, focusing on digital transformation solutions. Their services include data analytics, artificial intelligence, catering, and are catering to industries such as telecommunications, mining, and manufacturing. Foresight Holdings has seen very strong momentum in its stock price recently, with an increase of 85% over the past 3 months. This surge is attributed to the company's solid financial performance and growth prospects. We do have Tasha's in studio today to unpack some of the reasons behind this particular share price movement. Tasha's, welcome back to
Thank you
studio.
very much. Thanks, Brett. Okay.
Oh, good. Over to you.
Video now. So the sound playing there is actually Morse code, and it's data. But then there's also a binary code there, and a QR code, and a barcode. So that's all what we do is data. When is the introduction video playing?
It's already played.
Well, okay, good. Okay, so it's me now. Yeah, so luckily, hard work, last 4 years, solid double-digit growth all over. Revenue growth, operating profit, cash growth, very good results over the past 4 years after, the bad history of Foresight in 2019 that we fixed very well. And we just stayed true to our strategy. We strategized beginning of 2020, then COVID hit us. That was a nice article that was published the other day, best performing tech stock on the JSE. And we just stuck to our strategy, and that is to the convergence of operational technologies and information technologies with a bridge that we call the business environment. And that's basically our 3 clusters, and then we've got a 4th one of distributing all our knowledge into the rest of Africa and to the rest of the world as well. So we are digitally, while we say AI, I hear the other day the people in the Cape say I. So we call it now 4AI, and it's really the differentiator here is to deliver artificial intelligence on all the solutions and services that we present to the market. There's a big hype around artificial intelligence nowadays, all the co-pilots and stuff released, but there's not really a lot of solutions, taking that to business and giving business solutions. And I want to speak more about that. So good footprint of partners all over the world, in Africa especially, with our big expansion plans as well, aligning ourselves with Microsoft and their Kenya operations that's expanding into the future, with good growth. So that is basically the 4 clusters that we operate in, the information technology, operational technologies, the business environment, and then the channel partner business. And then we support all those businesses with a very strong centralized services that these guys and engineers can really do what they do well, and that is to deliver solutions to our customers and partners. And this is really what we do, these steps of taking companies, we always say, taking companies from no sight or hindsight into foresight. And the 4 steps that you really need today in order to do this. The biggest reward for a digital transformation strategy for any business is to actually get cost savings and actually save time to the business leaders, that you can do what you must do very well in all that saved time. So digitize, that you need that, okay? Digitized processes, for instance, to make out an invoice, but the way that you do an invoice in a company or do a purchase orders, with detailed lines, not just doing invoices on a cash account and never capture the customer's data like a cell phone or email address. So if you do it that way, you can't use it into the future. So the process of digitizing correctly, that is the big key here. And the next step in a business is to digitalization, and that's really to put processes there. Business process management in a company will save time, and it will ensure that you deliver your business or run your business with proper defined business rules in your organization. Then you've got data to really go for a digital transformation. And that's where AI and all the co-pilots really play a role, that it will actually start predicting and trends and analysis for you. So remember one thing is that AI will not take a decision for you. It will give you a recommendation. We're busy with a project now, what we call forecast, like in doing a future forecasting for a business. So we are in a process in Foresight now. We do have 24-month constant budget ahead. So as soon as any resource sort of resign in September, we kill his revenue in November, December until somebody's replaced this. So it's a real-time budgeting tool giving you the future view, and the co-pilot giving you analysis of your data as well. Our integrated annual report in August this year was also published, with co-pilot. So it's online. We applied to the JSE saying we only want to do it with co-pilots. They said, no, you need a PDF, okay? So we've got the PDFs and the statutory requirements there. But you can ask questions on our website saying, should I buy Foresight shares, for instance? And that's where responsible AI comes in, that we do have the correct data to give the facts out, and not to really make a recommendation, but to just give the facts out to the world. This is really the key business areas for financial year 25-26 that we're focusing on. The big thing today, I think, on any company, and I was listening to the mining companies now, is the whole question about ESG. So all the data in companies gathers, or the systems gathers a lot of data that actually give you those answers. So the environment, social, and the governance, the measures to actually measure that. And that's really where the co-pilots come in to say that this guy did produce that report, the compliance for HR with the receiver or Department of Labour, whatever is there. We've got the certificates, the occupation health and safety is in order, because somebody must upload that into a workflow system, for instance, and then the system will say, check, 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 done. The focus on the business pillars, this is what we focus on a lot in Foresight. We call this the DNA string of a very strong digitally transformed business. People, why is it red? It's got oxygen and it's alive. Okay, so if people don't have oxygen, it's black, it's dead. So really, that's any company's biggest resource today, or most valuable asset. Then customer or marketing sales, that is for growth. The operations in every organization, that's different, from a mine to a consulting business to a bank, it's a different operational system. Finance, solid finances measure, workflow processes, technology that can save you time there, a co-pilot doing accounts payable reconciliations today for us. And then innovation, that's really product. So some people say they cannot change their product, but they can really innovate it, the way they take it to market. And a big thing about product innovation is how do we innovate inside our organization. If I go back to this slide, the top one there, AI for AI, that's artificial intelligence for business. And then surrounding that, so we're building these models for a lot of industries and verticals. So there's a for AI for lawyers, there's a for AI for manufacturing, there's a for AI for finance. And then surrounding that is adoption and change management, because people, those red pillar, that's the people that must actually drive this. And so to do that adoption and change management, that's a big focus for us today, because you need to get the rewards on that investment in your technology. This is just examples of some of those pillars, so I call it pizza slices that we focus on. And a big thing, I recently completed a course at MIT on artificial intelligence for business. And the intermodal actions now, where you link up data, integration is probably the most futuristic thing that we need today in order for those data models to talk to each other and give you answers. You don't want to know that, you want to see that the customer is not doing certain things, and that's meaning probably that he will not buy from you anymore. And that's what the systems will predict for you. So there's people, solutions, there's operations, there's finance, and then the whole innovation as well, to track that innovation in your organization. Yeah, so that in short is Foresight, so futuristic business solutions. The co-pilot is not your enemy. Okay, artificial intelligence. I think if you see the headlines around the world, 80% of all C-level business drivers, they all say that they invest in AI. If you talk to the people on the ground, they say we're not ready. Okay, 80% say they're not ready, but that's not a threat. And I think the biggest thing that AI will give us as business leaders is time to really do what we do well.
Thank you, Seshes. Thank you very much for the presentation. And I think just on the topic of AI and, co-pilots and ChatGPT, I think it's becoming so much more usable nowadays, right? You can't fully rely on it, but it's definitely something that we need to integrate.
Yeah, I think that's an important one, because I think clearly for a lot of people, there's anxieties about what it means when technology becomes as sophisticated as we see it becoming. But I think the idea of it being a co-pilot assisting us get there faster, better, with better time management is something that's quite important. From your perspective, in the professional services field, is there an embrace of this being a co-pilot rather than a displacement tool?
I think definitely a thing that's happening is that the younger people, they embrace this very easy. Okay, they don't mind to log in twice with the same password anywhere else. We older people are a bit cautious. We still save it somewhere in an Excel spreadsheet. But I think last year, every year we do a staff survey. Last year, that staff survey, the report took us a week. Somebody to write a report in Word and present to the board. This year, we dumped all the data of the previous years into one database, and a co-pilot wrote us a report. And the board members could actually ask questions like, what's the most negative thing on people, or the most negative thing on marketing and sales, or how do you rate the CEO, and you get the answers out of that immediately. So that time saving is the biggest thing that we really drive, for execs. Yeah. But the uptake on execs, I think adoption change management, that's the big answer for that, to actually show them. And I think what we find is that people work differently, people work differently on teams and whatever. But the moment that you start putting rules down that the business can work the same, we had a customer recently with 6 execs and 8 secretaries, and they all work differently. But now they're on the same level, and now it goes down to Manco and down into the organization that they get the benefit of this.
Yeah. One of the key questions is obviously that such tools can only be as good as the data that exists, as the data that they can synthesize. So in places where data sets are not as deep as you want them to be, there are some markets where the data sets are not as deep as you need it to be. I mean, the JSE is probably an outlier where you probably have an entire century of data that you can use to inform particular trends. How do we then adjust for the fact that some markets and even some sectors just don't have enough data pools to be able to enable us to say, look, this is a valid proposition that this particular AI tool is producing?
Yeah. So I think a good thing that happened this year is the whole story about unstructured data. So there's a lot of information that's maybe in a PDF or a printed form. So now with unstructured data, all these tools and co-pilots can actually read that. So you can easily take the history now and actually dump it into a database and then compare that as well. Like our results, it's 4 PDFs that's compared with a spreadsheet as well that's actually giving the financial information in a more structured way.
Yeah.
Because when we only had the PDFs on our annual report, you got different answers because of the formats changing. So you need to give it some guidance on a more structured way.
Yeah.
So it's easier to get unstructured data into your co-pilot or into your artificial intelligence analysis and then get to that answer.
Yeah.
So, but it's still an effort to get that old paper-based systems into a system today. Yeah.
One of the key issues is that obviously for as long as we as people or citizens have enough insights into a particular data set or even a particular industry, we can kind of objectively say, okay, cool, we think these results are indeed a good reflection or not. But I'm worried that even in the ESG dimension, we are still learning ourselves. So we probably don't have very deep insights collectively. So now if we're then using these particular tools, there's a risk that people are going to say, yeah, that must be the answer, without the ability of saying, wait, hold on, actually, cumulatively, we've seen enough to be able to say, we think there's an issue here. How do we balance for that?
I think the big resource for that, I always say we know what's the answer. Now let's work back and do the sum. Okay, and the sum is really sitting in data. And all the big suppliers and vendors of software, they all have their own artificial intelligence tools now. And this is where the concept now comes in of multimodal models. So where you link that and then you get the truth, you know. So if you, like we've got a process now that we're launching as part of our innovation is to do away with the old traditional way of recruitment, where people send in CVs and then your staff must read 10 CVs. And then do 5 interviews, you know. So the co-pilots will now tell, if you want a job, fill in online. Upload your CV, we checked your LinkedIn profile already, and we compared data, and we see that this is 100% truth, and this is a fit to your job description. So that's the safe, but you say is very true. The data structures is more important than, you know, that's probably the most important thing that we need right now.
Yeah. The last one is that people are always worried about the ethical dimensions, and that's a topic for another day. I'm just curious, are there any particular industries or particular sectors where such tools are a no-go area? I know in academia it's been a long-standing battle of saying, well, if students can simply input this into some tool and get an answer, what is actually the value of the academic enterprise going forward? Other institutions, I know Stadio, for example, have then said, well, we're going to embrace it. We know people are going to use it. We just need to be able to then say, these are the new rules around plagiarism, around ethical clearances, now that we know that people are using that. But it still seems to be quite a very, very young way, in a very different way in which people are dealing with it. Are there particular no-go areas where we should say, that's enough technology for now?
I don't think so, no. I really believe AI is your friend. It will give you more time, you know. It will give you more time for innovation to better your business, you know.
Okay, Patricia?
Okay, good. So, Tashas, we do have one question which we have asked every CEO, and that is, if you had one superpower that would help your business, what would it be and why?
Time to deliver these solutions very quickly. Okay, so so we've got a good plan. We invest 20 million this year in building these little applications for businesses, like recruitment, for instance, that module. And it doesn't matter if you use different products from maybe Sage or whatever, payroll systems or whatever, HR systems. So these stuff, you know, it sits in the cloud, so it's on top of the application, and the data there will give you the answer. So stay on your apps, you know. I always say a trial balance is a trial balance, you know. That's the accounting system output. But your analysis really on your financial performance of businesses and divisions or whatever sits in your data that you link other databases to as well.
Okay. There you go, time and AI, right? The two go hand in hand.
Co-pilots. I like
co-pilots.
Co-pilots, yeah.
Why is it called the co-pilot?
We're co-hosting. We think collaboration always works best. And I think even in the world of technology, we've got insights and instincts as human beings, and we simply need this enabler to get us there. Yeah. Am I right?
There you go.
I've got this little joke, co-pilot, because the pilot flies the plane. The co-pilot is a guy that goes through the manual just before the crash.
Oh, gosh.
Just tries to remember what to do at the time
now,
of crisis.
well, now with AI, you don't want the guy going through the little book before the crash. But thank you very much, Tashas. Thank you very much for joining us in studio today. It was a pleasure having you here again. And we will be right back after this short video.
Introducing JSE Private Placements, the brand new state-of-the-art digital platform that smartly connects private companies with investors. If you're looking to raise debt, equity, or pre-IPO funding for your company, or if you're an investor on the lookout for new investment opportunities, JSE Private Placements is the perfect one-stop platform for you. Powered by next-generation global fintech leader Globacap and driven by the JSE's deep understanding of the scaling up process, JSE Private Placements is revolutionizing the fundraising and investment world. Turn your blueprint into a reality with JSE Private Placements today. Register at jseprivateplacements.co.za. T's and C's apply.
Now, before we close off for the day, we have one more presenter today. We've got the CIO of Altvest, Akshay, who has joined us in studio today. Now, following their announcement that they are transferring their listing onto the JSE, we thought it would be opportune to get Akshay into studio today to tell us a little bit more about the upcoming listing. The group has got an impressive track record in driving innovation and growth for their clients, and it is a real pleasure to have you in studio today. So we've given you an extra 5 minutes to tell us about the upcoming listing. Please tell us what investors can expect.
Sure, thank you. Thanks, Patricia, Kaya, and morning to everyone. So, Altvest Capital is a business born out of our passion, and really our passion is twofold. One is to connect ideas to capital, but two, and perhaps more practically, to create a platform for small businesses in South Africa to access traditional capital markets. And we do that through two major mechanisms. One is equity investing. So we've created a listed structure whereby small businesses can, through us, raise capital from their community, from their friends and family, and from their network of passionate customers and guests in some cases, to fund their growth ambitions. And they can do so through a listed, regulated instrument. And that's our equity business. On the debt side, we have a private credit fund, and that was born out of the realization that equity, whilst elegant and innovative, is not always the right solution for most SMEs. And so our private credit fund provides structured loans to small businesses to fund their growth. Both key franchises have been in operation for well over a year now, longer in the equity case, and we have some incredible impact and growth stories to share. So we're really excited about taking that model, which we've successfully implemented over the last few years, and take it to the JSE and broaden our market reach, broaden our sphere of impact, and hopefully, ultimately, broaden the number of small businesses in South Africa that we can impact positively.
Amazing. Now, as part of the listing, are you looking at raising capital prior to the listing, post-listing, and
Yes.
kind of what are you doing in that space
Sure.
there?
So we are raising capital prior to listing. We're raising capital across our 4 key investment instruments. The first being Altvest Capital itself. So that's us as the fund manager, the asset manager. And that's important to us because that will help arm us with the war chest we need to go out and roll out our business model at scale. In addition to that, our 3 respective equity investments that we've executed so far, all 3 of which are raising capital. So that's Mganu Lodge, which is an ultra-luxury game lodge on the Sabi River, adjacent to the Kruger National Park. Vunani Family Group, which is a fantastic woman-owned family restaurant that operates across Johannesburg, and Altvest Credit Opportunities Fund, which is our flagship private credit fund. So all 3 are also raising capital. What we expect to happen once we are on the JSE is that we will bring new investment opportunities to the market as often as we can. Hopefully once every 2 months, but definitely as often as we can. Because what we want to do is access this universe of interesting, exotic investment opportunities and bring them to ordinary South Africans.
So a lot of work in the SME space, obviously looking at growing the companies, which is fantastic, and using the platform ultimately of the JSE to profile your business and your clients' businesses, right?
Absolutely, absolutely. So we're passionate about SMEs. That's our core focus. We're also very, very focused on women-owned or women-empowered businesses. And so that translates in a very practical financial way into how we price our loans through our debt fund, how we approach structuring for our equity fund as well.
And last question, timing for the listing? What
Sure.
are you?
We're expecting to be listed by mid-October. Stay close for the correspondence as it starts to come out. There will be a period where ordinary South Africans and institutions will have the opportunity to invest alongside management and our investors to date and participate in our book pools, which will happen exclusively through Easy Equities.
Well, there you go. If you are an investor looking for some upside and particularly looking at investing into a new listing, we do have Altvest that, of course, will be listing on the JSE soon. So that brings us to an end of the show today. Kaya, thank you very much for co-hosting with me again. Any closing thoughts from your side?
Yeah, I mean, I'm excited about the idea of bringing ideas to capital, and I think the Altvest listing is probably going to be a big moment for the JSE. I do have an involvement in the business, and I serve on the board, so it's obviously quite exciting. But I think also the businesses that we've been able to engage with today has been quite illuminating. I think people do need to occasionally take a step back and try to understand what it is that drives decision making across different industries and across different businesses. And I think today has been yet another very informative lesson for all our investors.
And I think certainly in terms of the presentations, we've had a lot of acquisitive strategies, right? Looking at growing the business and then some looking organically and really kind of bedding down and making sure that you
and it's a big
those
thing,
assets.
I think, particularly in South Africa, where there's always a market for looking at how you can do better in managing other businesses. So acquisitions are always going to be a big part of how we do business in South Africa. And I think today we've been able to see some very good example of people who found the right science of balancing their own internal core capabilities versus what they want to be able to do with the businesses that they acquire.
Amazing. Well, thank you very much for joining us for the show today. Thank you very much for all the presenters, for their great presentations, and of course for the thought-provoking questions. Kaya, we could not do this without you. We hope that you enjoyed the show and stay tuned for the next round of investment forums. Thank you very much.